Pickleonia.
Good morning, everybody. How you guys doing? All right, so I saw Stefan's question. With regards to brokers and prime tax incentive to recall shares before the GME stock split, can short hedge funds instead make a deal to give a cash equivalent to brokers and primes so that they don't recall shares? Potentially. So you're saying they give them a cash equivalent and are instead awarded with the broker's dividend? That doesn't work. No, I don't think so. I don't see a route to that. Can they pack it all up in another total return swap? Maybe. Figured out my P&L for GME on the past year. It's $420 a share. Am I doing this right? Hey man, you're lower than the peak, right? It's worth tuning in just for the God tier intro. Thanks, A user. And thank you for the people who collectively made it. I hope you were able to celebrate a big week of wins, man. You deserve it. A little bit. I just had workmen here. They're trying to fix the like water line for my refrigerator. So sorry about the delay, by the way. That's why. Yeah, I saw Turd's post. I know about it. Seeing you in color after so long feels weird. All right, let's give everyone some stuff. If a share recall is for sure a sure thing for a squeeze, wouldn't smaller hedge funds already try to close their positions? Thanks. If there are smaller hedge funds involved. This is why you do. Thank you, Ty. I appreciate that, man. This is why they generally direct one entity to manage the positions. That way nobody can bail early, right? It's like the mafia. So if one entity is controlling all of the positions, then they're less likely to like, try to get out early. And even if a small, like a really small fund tries to get out, it wouldn't have a noticeable effect on price, right? Did you finally beat that dragon using total return swaps? I haven't gone back to fight the dragon yet since I leveled up. I probably will, but I'm in like some weird castle place right now. Sorry. I appreciate that, Ty. Again. Good afternoon, Sitting Bull. Great to see you. Hope you had a good weekend. It was okay. Any clarity on whether it will be a split or a dividend? Is a dividend off the table? A dividend's not off the table. Most of the difference between a dividend split and a split, like a forward split, is in the accounting of it. They could do it either way. We still don't know, right? Because we don't have the official announcement, but they have left in the 8K room for either. Next week's predictions. Looks like your Wyckoff pattern is accurate despite the share split announcement. Wyckoff should be accurate despite smaller external catalysts. It shouldn't be affected by that. Because smaller external catalysts obviously don't have an effect on how institutions are going to move into their positions. Institutions will be attempting to get into positions, right, in these ranges. And yeah, ultimately that is what drives price improvement. And why our volume is still so high, right? Even though we had a massive sell-off on Friday, someone's buying all of that, right? Like there has to be a buyer in order for that much volume to be generated. Which entity do you suspect? That's where I'd suspect Citadel and the management of the position. I don't think Citadel's directly responsible for creating it. I think the short positions on GameStop put their volatility positions extremely at risk. But if I were to have somebody manage my over short position in one of these stocks, it would be them. They have uh, more ways out of reporting than almost any other financial institution. Ken Griffin has been a busy bee. So like purple circles, it's not a prisoner's dilemma when you have one person manage all the positions, right? When you have one entity managing the position. Enough BBBY and GME FTDs for some price ups this week? Possibly. 4/7's an interesting date. That'll be the first day I believe FTDs are due on BBBY from Cohen's buy-in, or from the announcement of his buy-in from that big spike. So that'll be interesting. With regards to brokers and Prime's tax incentive, it was the first question I answered today. Stefan, was yours. Now you've asked it twice. So like purple circles, prisoner's dilemma with short hedge funds. What are the different implications of a dividend split between large and small dividend as described on Investopedia? Accounting stuff, share recall. A share recall is more likely in a dividend split scenario than it is in a forward split. Both of them generally cause a share recall because long institutions want their shares accounted for moving into the split, right? And so, not that they necessarily want to vote. Splits are always bullish. Longs love them because, it shows a confidence not only in the company from the board and its investors, but it also, allows for more liquidity and more leverage. So, a split is a great thing when you're long something, and you want to make sure that you receive the full extent of that split. And so you would call back your shares in order to ensure that. Eric, you seem well rested, looking good. So I know you don't like to give out guidance, but I need some. Hmm. What date would the institutions need to recall shares before a potential split? 2 days before. I think. I mean, not even technically. When recalling shares, they can recall them immediately. They do not have to give a window for the short hedge funds to return the shares. They can demand them instantaneously. Um, they usually do in order to preserve relationships with other large entities. They'll give them, like T+2 standard settlement period. Sometimes a little longer if they're really someone special. Hey, Girk, is voting for the AGM come into play with this? It can. If they decide to vote. I mean, it's unlikely that a split vote would fail. Short hedge funds can't vote their shares, right? So they can't vote their shares on behalf. And then, anybody long the stock is basically going to vote yes for a split. Do you think BBBY will squeeze before GME? I don't know yet. FTD is still relatively low on BBBY, but we need to compile the data still for the ETFs that BBBY is in. I mean, IWM has very large numbers of fails. We were hoping to see more direct fails on BBBY, but they were picking up in the early part of March, and they may be picking up even more now. A lot of that was trying to determine what was the BBBY buy-in replicating. Is it going to replicate, Ryan's August buy-in to GameStop, or is it going to replicate his December buy-in to GameStop? And it's still a little unclear because the way, they divert settlement of FTDs through ETFs now. And I don't know if that's a strategy they were really using last year. So we'll just continue to follow it. Like I said before, long positions, leaps, things like that are best, or shares. The price point is still cheap. It's still trading up 1/8 its book value. Yeah. When they offer a split dividend versus a stock split, what's the difference? Well, in a forward split, uh, short shares just split, right? When a stock is issued as a split dividend, the float is increased, but shares are only given out to shareholders, and then thus shorts would be on the hook for the dividend value of the split. So it's mostly in how it's the accounting process for it, but it does do a little extra to fuck the shorts over. Do you think shorts will jump back in or short more after the split on GME? Probably. Or new shorts. I know we have talked about this, but when they offer a split div, okay. Why do institutions lend out shares if they're used to destroy the value of their assets? They make that much more lending them out in the end. Well, because they have a long holding period, very long, right? During that holding period, they don't really care. It's just income generation. They can still sell covered calls off those lent shares, right? Because they have the right to call them back. So they get a profit off of they're going to profit off of everything they feasibly can, and share lending is one of them. Especially when the rate is at 10% or whatever it is now, 9.6, when it's at 20%, right? Because they don't care about the value of the asset in the near term. They care about the growth of the asset over time. And GameStop's doing fine, right? Like most lenders are not negative in their position. GME-CC is pretty much off the table until after the split. Would PMCC still be a decent strategy? I mean, PMCC is, but you're still caught in the same situation if the stock rips, right? With a PMCC as you are with with a covered call, and that, you know, your gains are maxed out. I mean, yeah, you can, you know, offset your theta, but if the stock rips, you know, you're still not making any money because you're not purely long, right? I think the shorts, because even like assignment's the worst case scenario for a covered call, uh, essentially for a GameStop shareholder. Not That's not always true, but for a GameStop shareholder, assignment's undesirable, right? And then, you know, if you're getting assigned, you're still getting the value of your shares at that strike, right? You just have to buy them back plus the premium. PMCC would be the same thing, except, you know, you're just getting the value difference between your longer dated call and your long call and your short call. So theoretically, Wyckoff phase D can have a lot more bounces than 3. Yeah. I mean, 3 is drawn to indicate an accumulation pattern. And you know, if accumulation's very strong, then usually about 3. But it can drag out. You know, you can get much more consolidation. And it can take some time. But it looks like I haven't missed much. Not too much. As we move forward, are you looking for a bottom or something else before you re-enter a GME call position? Well, I'll be looking to see if Monday we slip, although we did close above max pain, and Monday and Tuesday look good for some, you know, more gamma exposure, which would fall right in line with our Wyckoff expectations, right? But you know, I'm just being patient. I made plenty of money on this run. I can afford to be careful. Curious, as you've always been prepared for the upside, but now you don't have a call position. Yeah, but I have a lot of shares. I mean, I'm always prepared for the upside, right? That's the beauty of, you know, playing options on top of your long stock position, is that, you know, your insurance for the stock rocketing is your shares. So if GameStop squeezes, you know, I have 5x shares. I'm not super concerned. Provided the rumored date of the shareholders meeting is the 2nd of June, when do you think a share recall can happen? What do you mean the rumored date is the 2nd of June? Who the fuck said that? There's no date until there's a date. They're probably not going to recall shares before the shareholders meeting. They will most likely not recall shares until the actual split occurs. Good morning, sir. GameStop versus BBBY. Obviously, GME has more potential. My question is timelines. Is BBBY playable in order to generate capital before the GME split recall occurs? Not necessarily. BBBY is equally unpredictable. Um, their earnings are coming up. We don't know what's going to be said there. Um, it's already kind of touchy, and, you know, options interest is extremely high. So, I mean, there's no way of telling which is going to happen first. like FTDs aren't the only thing that can make BBBY run. They can just make it run harder. Best time to buy in for calls to play the GME run up to the split. I don't know. We don't know when the split's going to happen. And it's going to be announced at the shareholders meeting, so IV's only going to increase until the earnings date, right? IV's going to ramp up, and then IV's going to be high moving into the split. So sooner the better, but remember the risk. I'm sure you all do. What do you think about the theory that we will see FUD on super smooth, that a split is bad because it will affect DRS? I think Superstonk, is gonna. I don't think they're gonna vote against a split. That'd be insane. Yeah, I mean, a post split GameStop will likely be unregisterable in those numbers. Theoretically, it doesn't change anything, and it increases the number of shares held in DRS. But it will, I mean, ultimately it'll increase liquidity, right? More shares available at lenders means more shares available to borrow. The effects of that increase in liquidity can take some time to play out, but there will be effects. But with a split, interest can also pick up, right? And that can overtake the liquidity provided. Didn't it take like 3 weeks for Burry to get his shares back? Do you see a similar delay when shares are recalled? No. Just Burry's, if like Fidelity or Vanguard are lending shares, they're gonna demand them back. That wasn't the case with Burry. Burry's not margin calling anybody. So got my 16250cc assigned last week. Taking into account this is about the only capital I have available. Selling at the money puts, best way to buy back in. 16250C. Taking into account that's my only capital I have available. Selling at the money puts is the best way to buy back in. Buy some calls to hedge my risk, I figure. You can do that. You can also just buy back in. We're only $2 above where your CC sold, and I'm sure your premium was higher than that. So you're still in a net profit, even if you just buy back in. With capital instead of shares, I can write bullish options now. Just try to make it go the furthest. I mean, yeah, you can. I don't know how much time you're gonna have because we don't have announcements, right? It's almost like political catalysts. Like we don't know when GameStop is going to say something. We know that there will be an announcement for a vote to approve the 2020 plan or 2022 plan at some point before the shareholders meeting, which is a couple months out at least. And then after, if that's approved, then we know that there will be an announcement at the shareholders meeting of a date for a split. And we don't know when that'll be. They can announce a split for September or October. There's no guarantee they're going to announce it for like 7 days from the shareholders meeting. If FTDs hit BBBY on 4.7, do you think my $30 calls that are already down 50% can recover, or likely not because of theta decay, bad entry? What's your expiration for the calls you bought? If it's a near expiration, you could be in trouble. You may get a bump from the earnings IV. That might help you. 2 Dans, 1 Subway Cup. How is the cost to borrow affected by a split? Shouldn't be. Same number of shares on loan as already exist. It's just a multiplier. Like, it doesn't change anything, right? So, you know, if you've lent 2 shares, now you've lent 3. If you owned, you know, or like, depending on what the split ratio is, we don't know, but the ratio just changes. That's all. God, I wish I never had to live in a world where I have to explain stock splits. Before the announcement or the divvy date? What? Is there a difference in how our options are treated if the stock splits versus a split dividend? Yes. If it's a forward split, as long as the ratio is even, then the number of contracts you have splits. If it's a split dividend, the amount of underlying splits. Yeah. Oh, and if it's an odd ratio, then the amount of the underlying splits also. What's your gut feeling on how this will play out? If there is an incentive to start covering prior to the vote? I don't think so. There's never an incentive to start covering. Again, nothing's changed on that front. Shorts will only cover when shorts need to cover. They will never cover otherwise. Just without any GME options. Is this entire stream just going to be people asking me when to buy more GameStop? Whenever the fuck you want. I don't care. You know, IV is not really decreasing rapidly right now. Use IV as an indicator. The most profitable options are always bought when GameStop is, you know, relatively low IV. If we continue to consolidate, that means IV will go down. The point at which IV is at its lowest will be the best time to buy. Good luck timing it. I hope I do. That's it. There is no rumored date for the shareholders meeting. The shorts by hundreds of thousands of, and also the date of the shareholders meeting is fucking irrelevant. Couldn't the shorts buy hundreds of thousands of deep out of the money calls right before they start covering and blunt the squeeze potential? Yeah. Although that would also increase the squeeze potential if the price goes up, because those would also be hedged. Right? So they'd be adding positive delta hedge to the chain, which is not good for them if they're short. Do you think they will actually start covering BBBY FTDs starting April 7th, or do internalizing tricks cycle stuff? I have no idea. That's why I bought Leaps. They could. I mean, there's no internalizing on NASDAQ. They can internalize through like PFOF, but they can't internalize directly through the exchange like they can on NYSE. Later, Rugus. Have a good weekend, man. Looks like you need some more coffee. I'm alright. I still believe in SS because it's written in CS. It's just so. Not only does the date of the shareholders meeting just not matter at all. Any broker or stock platform that gives you an estimated, it's an estimated date It is just that. It's their estimate of when the earnings call will occur. It's meaningless. The only announcement for, like, just like 317, you know, when everyone thought it was going to be later, the only announcement that matters is GameStop's official one. When GameStop says the shareholders meeting will happen on this date, that's the date. Until then, there is no date. Long time poor, first time gazillionaire. So this next chapter in the thrilling GME drama should be a big one. First time we can tell how short they really are ever since they quote unquote got out, right? Yeah, it'll be. I'm excited as fuck. This is gonna be an awesome couple months. What's your reasoning for not tightening up your weighted VWAP bands multiplier setting, i.e. the upper and lower bands of VWAP? Because we're volatile, we trade in a broad range. This isn't like, you know, a SPY or steel or like a commodity. This is a highly volatile mid-cap stock. Always, Stefan, always assess what you're analyzing, you know? Analysis for one is not necessarily analysis for the other. So what works on some stocks doesn't work on other stocks, right? It's not, there's no one size fits all for anything. The June meeting would likely be spicy since it will be after the NFT marketplace launch too. They've committed to launch by end of quarter two. They said they're going to, maybe, it's not a commitment to launch by end of quarter two. I mean, it could be delayed. It wouldn't be the first time an announcement like that's been delayed by companies. Hopefully everything goes according to plan. Ryan Cohen doesn't seem the type to delay at the last minute, but it can happen. It's not a guarantee by any means. If you're holding options during a split, does the value of the contract increase if this goes to a 3-to-1 split, or am I thinking about this wrong? The value of the contract shouldn't change. Depending on the type of split we end up getting, whether it's a split dividend or not, nothing changes. The value of everything remains the same. It's efficient market, right? So there's no value change in anything, technically. Market cap on GameStop remains static through a split. It doesn't change the market cap. Months ago, I recall you saying a GME split would be good short term, not so good long term. Has your opinion changed? Not really. No. I mean, I'll be happy to have more shares. It's not good. It's not that it's not good long term. It's not good for a squeeze long term. As the stock becomes more liquid and that liquidity begins to be realized by the market, the potential for a short squeeze becomes less. Remember, GameStop kind of in that Goldilocks zone for a potential squeeze. It has enough shares that a squeeze could be big, and it has few enough shares and low enough liquidity that a squeeze is possible. Both of those factors change with time after a split. Like immediately after a split, everything's the same technically, right? But as that liquidity is realized by the market over a period of time, a squeeze becomes less and less likely. A Tesla type squeeze is more likely with a more liquid stock than our current potential. Sounds like it's fair to say that if RC wanted people to DRS to trigger MOASS, he probably wouldn't be pushing a stock split. I don't think RC cares. I think he cares maybe about getting the shorts off the stock now. That seems more obvious than it has for the last year and the last month or two, right? Um, I would say he's actively committed to getting the shorts off the stock. DRS doesn't do that, so it would make sense that that's not his goal, right? What's the shortest time frame after a meeting a split could realistically be announced? I think it's like 10 days, but I can't remember the exact SEC. Like there's a rule for the number of days in advance they have to announce. Jacob Williams, welcome to Cornishon, man. Thank you so much. I appreciate it, dude. Could market crash still factor into GME and BBBY run up squeeze between now and a split? Yield inversion is a bit scary. Absolutely could. Again, a market crash is a black swan event as well, but not all yield inversions lead to a direct crash, and we've already just come out of a very steep correction. So the market is more stable now than it was at the beginning of January. There is instability, but it could just be a slow decline, right? Not all crashes have to be fast. It could be a slow bleed for months, years, in valuation in the market. For ETFs used to short, how would the dividend split play out for a strictly managed ETF versus a loosely managed ETF like XRT? The loosely managed ETF somehow used to avoid the pain. A bit. I mean, to the extent of shareholding they have in GameStop available in the ETF on a daily basis. That mean in a perfect world, the price would be the number of shares divided by the current price. Yeah. What are some of the most profound implications of a more robust options chain because of the stock split, i.e., more people can afford 100 shares for options writing? Honestly, with improved liquidity and a more robust options chain, you're probably looking at a stock that's less or more detached from its derivatives. GameStop's illiquidity makes its derivatives run it. Whereas, stock like AMC, it's the actual buying of shares and less so the derivatives that control price movement. Abe's, welcome to Cornishon, man. Thank you so much, dude. With the last peak being slightly higher and the low being lower, is Wyckoff affected at all? Not really. It's, you have to remember GameStop's volatile and way more volatile than the average stock, right? Like top 5 percentile for volatility. And so, we can expect it to ignore the stricter limitations of these types of patterns. It's going to have a little more upside, it's going to have a little more downside, and that's just, it's super volatile. So, as long as we're still following the volume trends that we expect to see, high volume downside, lower volume upside, this is accumulation of long positions, and you can see that play out here on the 1 hour. If you look at our like, downward candles, our closing down candles, they are generally higher volume than the green candles over the last 4 days. Barometer for next week, you'll find out tomorrow. Just a gut feeling, but is Ryan Cohen playing more fundamental catalyst before the split to encourage long investing and force a squeeze and then split at higher prices? I mean, we'll probably split at higher prices anyway because of, pre-split FOMO. But yeah, that's very common to, dump a bunch of announcements right before you split. It also drives post-split interest. This is why it's so common for companies to release shares post-split in order to pick up some cash. And that post split share offering deals less damage to long-term shareholders, so it sort of insulates the longer-term shareholders against the damage that would be created by a stock offering. Are you still focusing on the data relating to another OPEX cycle playing out in late May, June, or with recent events? Or are we just in uncharted waters? No. I'm still going to be tracking the OPEX cycles, but it's early. We are not yet near a period where that data would start to become relevant. So we've just had OPEX essentially after March 18th. Moving forward from there, we're not really going to see any effect from that until we start to approach mid to late April. But I will be tracking it. We will have our FTD charts. We will be on top of it. We will, ensure the accumulation of positions. We'll be watching the puts build up in XRT. We'll be watching the puts build up in, other large GME ETFs. We'll be looking for ETF flow that indicates, short position compounding within ETFs. We'll be looking for GameStop FTDs, finally, due to all of the extremely excessive shorting and borrowing that's been going on GameStop itself. And yes, the most likely period for that to be realized is either May or June OPEX. I'm doing all right, man. I had a steak dinner last night, but you should do it. Are you feeling like a steak dinner would be delicious? Because that sounds good. Jimmy still buy back $100 million in shares. You think they would before the dividend split? I think so. Isn't that part of the 2022 plan was like 8 million shares or something like that? Sorry. I've had like a tickle in my throat all week. It won't go away. CC is still on the table. Sure, they're riskier. You'll want to either hedge or you'll either want to hedge them or sell them for very short periods of time. You'll want to be further out of the money as a protection, so if it does run, you have time to buy them back. You'll be able to take the same kind of risk with these announcements on the table that might have been able to do in the past. There have been periods of time on GameStop where we were very safe selling, in the money covered calls on Tuesday during the gamma exposure run up and then buying them back on the end of week dip. That's not so true right now. These hot tub streams are the most helpful of them. Thanks bunches for answering my questions. Follow up: sell out the money long dated puts, buy out the money calls with little theta, play gains, and hope for assignment. You don't want them long dated because you'll never get assigned. Not unless the stock goes way below that price. Also, at the money call doesn't hedge a sold put. They're the same bet, right? Sort of. A put hedges a sold put. So, like, say you were selling naked puts, you would be buying a long dated naked call to hedge a short dated, or a long dated put and long put, in order to hedge a short dated short put. Just the opposite of a PMCC, right? Would you under 100% be considered? Would under 100% be considered low IV? Yes. It's unlikely it'll go that low, but that would be considered low IV. Sometimes you can get leaps in that range. It's very hard to get, like anything within 90 days, like 90 DTE in that price range. Thanks, Dances with Hand. If I'm down 50%, thank you, Luna, on 414, 160, 220C, do you think it would be better to cut my losses and sell them on the Monday, Tuesday bump, and then buy back out in after a few weeks from now for a longer dated expiry? Yeah, if you can get a nice exit. I feel like you probably had one Friday morning, or maybe you bought them Friday morning. But yeah. If you can get out, they're a bit close, right? Does that mean they can announce a meeting tomorrow to be held that day or the next day, like any day? I mean, they have to vote first before the meeting. And they're still going to do it in line with their fiscal quarters because it's, the shareholders meeting is still earnings generally for Q1. Awesome, Lawrence. It's a good book. It's a slog to get through, but it'll teach you a lot. Do they mean they could announce a meeting tomorrow to be held that day or the next day, like any day? What's short hedge funds' most profitable course of action going forward? They need to open up liquidity. That'll be their goal. Moving into a stock split will be to open up pre-split liquidity. I think the best way to do that on GameStop is to run the price. Not a lot of liquidity at the bottom, but there can be a lot of liquidity at the top. Far off topic, but have you seen Carl Icahns' letter to McDonald's and Kroger about protecting humans and animals? I'm curious about the timing being so close to Cohen's children and animals tweet. No idea. Sounds like a bit tinfoily. I mean, Icahns' letter to Kroger and McDonald's is probably a financial move. I don't know what the fuck Cohen was tweeting about. Maybe. But you'd never be able to tie them together. Would Wyckoff ever be valid for an ETF? Yeah. I mean, ETFs accumulate. It's not as valid on indexes, which technically an ETF is, right? Because it's tracking a certain class of assets or set of assets. Why is your chair pillow on upside down? I don't know. I'm not being sponsored by the chair company. I'm not. Which leaves me free to say that this chair is mediocre for $500. Are you concerned about the yield curve? I mean, I told everybody back when the Fed first started announcing rates that the yield curve was going to inverse because they're raising rates, right? And a lot of the Fed's assets are near term, so it really hurts the Fed. And that was one of the main reasons I thought they wouldn't be extremely hawkish, which they haven't been, right? They've been very moderately hawkish. They'll, try to stabilize that yield curve inversion as much as they feasibly can because they have so many short-term assets. I don't expect a lot of rate increases moving forward throughout the rest of this year. I think they will try to scale them back. They will try to, even with the political pressure right now, as soon as they can get inflation a little bit in check, they're going to start pulling back and behaving far more dovishly. To be honest, a rate increase at all was a bit shocking. But yeah, likely leading towards a recession. I think that's expected at this point. Anybody not expecting a bit of a recession after all of this, it seems silly to assume that we're going to continue to have a bull market. Definitely not. Which means that learning to sell covered calls and cash secured puts is all the more important, especially if the market stagnates. That's very, very bad. For trading, in the way that you think of buy high, sell low, sell high, buy low, because when the economy stagnates, so do equities, right? And so you're dealing with a lot of trading sideways, and when you're doing a lot of trading sideways, you want to sell theta and you want to sell volatility. You don't want to buy it. Do you have any new plays? A couple. I'm still very interested in some of the same tickers, obviously. But there's a couple new plays that I've been talking about. X has been doing really well. I kind of want to touch on that one again in the Pickles picks tonight. Because it is reaching another point at which it can break higher. I think there's another entry opportunity for people that may have missed out on the long-term play there initially, back when it was trading at $32. I may be averaging down on wheat soon, so I might touch on that, and that might be next week though, in all honesty. And then there's a couple other things that I wanted to talk about. As the yield curve inverts and we're starting to possibly look at a recession. Oh man, I think I fell behind on chat. 1 second. Okay, you skipped my question earlier. You exited your in the money June calls before the split news. Would you have managed them differently with this news if you still had them? No. Where I exited was possibly the best point to exit those calls. I couldn't be happier with it. Maybe 3% from the peak, not even 2% from the peak. Yeah. And the peak in IV as well. Do you have any new plays for this coming week or sticking with the same tickers? Okay, I talked about that. Are you gonna make a clip or a vid that explains the split? Something to reach people or to explain to the naive? Possibly. Maybe I'll do that tonight. I'll record something and throw it up. I've had the bulk of my 401k sitting on the sidelines, expecting a big crash. Do you think the further market corrections are expected, or should I just stop trying to time the market? Um, I mean, you probably don't have the capital to time the market, frankly. Not as an insult or anything. You can have quite a bit of capital, but timing the market's a risky play and best left to large institutions that can hold those positions for years and years if they're wrong. I would say that keeping money on the sidelines right now isn't a terrible idea, but after the most recent correction, a crash is less likely, right? A lot of value has already been lost in the market. We see things trading at multi-year lows right now, and that's not really a situation where you can say this isn't gonna get, or this is definitely going to get worse. A lot of that is already priced in. If the Fed is doing what they intend to do, which is ease us into a period of recession, then they are so far fairly successful at it. Win merch store? I don't know, man. How many feet off the ground do you live? I don't, like 100 and something, few hundred, couple hundred maybe. A slow bleed of the market affects hedges like UVXY VIX differently than a volatile crash. Yeah. Well, this pops off. What is your first celebration dinner going to be? I'm holding a bottle of wine, but I still want to figure out the food component. Might go for like a chef's table at per se. Will MOASS start before the split dividend, meaning that we'll enter MOASS with our current amount of shares unsplit? Probably. If it is going to, if a squeeze is going to occur, it is more likely to occur before the split. The K8 specifically said it's a dividend split. That can change. RC and Elon Musk are friends. They fly to each other's homes to hang out and both hate shorts. What if Tesla and GME share split occurs close to the same time? More pressure on the shorts. Not necessarily the same short entities. Burry was short Tesla when he was long GameStop, right? Tesla split had been announced 8/11/20 and said split those held by record date of 8/21/20. FYI, whoever asked earlier. Oh. If I buy 100 shares of something, nope, you don't have to wait. But buying 100 shares of something just to buy 100 shares of something and sell covered calls is generally a bad idea. Usually what you would do is you would sell cash secured puts until you end up with 100 shares of something, and then you sell the covered calls. What do you think about scalping GME intraday options as a way to profit and potentially hedge VWAP should we receive an unexpected catalyst? Also, mad appreciation, respect. Risky and harder to do. Like, I think you guys saw on, what was it, Wednesday? We lost a lot of the volatility that we'd had the day before, where, scalping options was extremely profitable. There are times when our breakouts are more reliable and times when they are not. And so, it's risky. Like I've said before, GameStop is not a great day trade stock. There are opportunities to day trade it, but they are few and far between. What I mean is sell at the money for a nice premium for pours and then buy a close to the money call just in case it runs. That way I can buy back in close to where I sold and collect premiums till. Post the money call in case it runs. Well, if it runs, then, you know, you can just, I guess, sure, if you're trying to like double down on a move to the upside by collecting the premium on the low end and the call on the high end. That's it's just a, I mean, it's like a bull credit spread, right? It's Office Depot Work Pro 9000. I wish there was like a chair store where you could go try out various chairs. Does IV matter much when buying long dated calls like July? I mean, July would still have some effect from IV. IV will be lower the further out you buy, but the further out you buy, the more sensitive to IV the contracts are. Do you think Adam Aaron will let RC use his login password? What do you think about scalping GME options intraday? Answered that. Share shell confirmed. Was it too late to buy Amazon shares before the split? If one wanted to sell CCs, is a better way for the dip after the split, then enter a position? You could. I've just been selling CSPs in order to generate revenue to buy shares for the split. So what I intend to do is continue to sell CSPs, right? And then if there probably won't be a significant post-split dip on Amazon, right? That's going to generate a lot of interest as the share price lowers, right? So I'm just selling CSPs under the current price action right now, and I'll buy with the profits from those. I'll buy whatever I can before the split. If I want to buy more after the split, or I see an opportunity to buy more, lower my cost basis post split, I will. But CSPs, because of the value of Amazon shares right now, are very, very profitable. Is SLD still a thing? Yeah, and we might be experiencing it right now. I'm going to be looking out for signs of it because this is the period for settlement still. Traveling next week and won't be able to watch much. Would you set stop limits on in the money June calls that are up big, or be patient and ride this out? Free Guybrush, he's our only hope. You set stop limits on in the money June calls that are up big? Probably. Yeah. If I'm not able to watch the position, I would definitely have a trailing stop. Do you have any plays in Oxy? Occidental? No, not really. I don't like jumping into Warren's shit after he's already in. Especially when he starts announcing these in and publishing it everywhere. Is there an indicator on TradingView that tracks GME volatility? Not accurately. 4 weeks of down between March and June runs last year. Let's repeat unless hype recall or just ETF fuckery and downs. Yeah, I expect we'll have consolidation. I don't know how down we're gonna go from where we are. Historically, we're at a level where we are already down, right? This like 160, 170, 180 range. Really 158 through 180 is, a support level for us in the past. It was a support level between, August and November. It was, a support level a few other times as well, with our lows dropping around in like the 140 range through most of our cycles last year. This is a level where GameStop actually has far more support than it had to the downside. I think it'll depend greatly on what gets announced at the BBBY shareholders meeting. BBY can run hard, but it's more liquid than GameStop currently. So remember, it won't ever probably run as hard as GameStop. It also doesn't have the ownership interest from retail that GameStop has that provides that illiquidity. So it's much more stable on its runs. How many people live in your apartment? Weird question. Would you consider the volatility squeeze off of the table now? The market went through a correction and not a crash. It's not off the table, but I do feel like over short volatility positions are getting out, but slowly. There's still a feedback cycle on the VIX there. Not necessarily, but they will be de-risking. Thanks, Yo Banana Boy. Not fasting, but I haven't eaten. It's not intentional. It's not like I'm like, oh, I'm gonna intermittently fast. I just don't remember to eat. Cosmic Lightning Warrior interviewed Tobias Demel, who did the HBO Jimmy doc. Helpful. Interesting. Hmm. Well, he didn't share a lot of that in his documentary. If we see downs to below the previous peak, is that a confirmation of a Wyckoff fail? As it's expected a higher low, and if so, where would we expect support? We see downs below the previous peak. Is that a confirmation of a Wyckoff fail? Not necessarily, as long as we bounce and then trend back up. I've told you guys before, consolidation doesn't have to stay stable. Like, it doesn't have to be equal, right? Consolidation can trend, down. Consolidation can trend up. This would indicate higher buy pressure. A trend down would indicate higher sell pressure. An equilateral trend would indicate that they are about even. There's a reason this is called like the last possible support or lowest possible support. So a break below this support, that would be bad. A break below this, I mean, it's not good, but it's not necessarily bad. Like, it's not confirmed awful. Philly fan, thank you so much for becoming a Dillionaire. I appreciate it. Hit me up on the Discord. I'll get you added to the country club after the stream. Just wanted to say thanks. Thank you, Samuel. I appreciate it, man. Do you think RC's BBBY lead service way is signaling that BBBY will be above $80 this year? Or just the cheapest way to buy the ownership you wanted? What percent of people living in your apartment do you think find the question asked of how many people living in your apartment weird as fuck? 100? Thoughts finding a company. I usually am in my apartment alone. Harry Balls, thank you so much for upgrading to Dillionaire, man. I appreciate it, dude. Same goes for you. Just hit me up or the moderators on the Discord, and we'll get you added after the stream. Thoughts finding a company to make a small run of custom desk chairs. I'd wager that the quants would buy on, and a lot of stream members I would. Definitely a lack of quality chairs, sub $1,500. I mean, that's what Streamlabs set out to solve, but then didn't. Also, not really into manufacturing personally, although trading does require good chairs. Is there any reason to expect positive price improvement on XRT? Sure, it's super over short. Also, consumer discretionary tends to do okay during periods of economic decline. Retail does okay during periods of economic decline. Not so much the discretionary part, but they do see some advantage. Do you think we're starting to Vanna Volga squeeze? No. Maybe we were going towards one, but not anymore. Volatility does remain high, and there is a feedback loop on it. But with a gamma exposure coming up Tuesday, that's going to drive more volatility. It's going to be hard to reduce the volatility. Once volatility breaks out, it's far harder to contain, right? Thanks, Harry. I appreciate it, man. Congratulations on a successful run. To all of you guys that, made money on this last run in GameStop, congrats. Good job. Thanks for listening to me drone on for 8 hours a day. I appreciate it. Jebin, Swartwood, thank you so much for becoming a Cornishon, dude. I appreciate it. Varga Mama squeeze? What? I bought July 200s around 190. I'm down 30%. Should I hold or sell for the next bounce? You can wait for the gamma exposure on Tuesday and hopefully get a better exit. Thanks, K-Mac. Have a good one, dude. Since we bottomed out on the Wyckoff, sounds like it's time to load up on calls for tomorrow. Not necessarily. Also, you don't know how volatile the upside will be. These patterns aren't, guaranteed to play out this way. These bottoms can drag. They can bottom out for a while before coming up. Like, it doesn't necessarily mean like, oh, we're definitely going to run tomorrow. You'll need other indicators of that. Where's my high? Do you think the phase D will continue to Wyckoff on the early weekly option cycles? Seems like the danger days are 0 DTE and Tuesday T plus settlement days in this phase. Yeah. It looks good so far. And remember, we can see continued consolidation beyond this point, right? This is while 3 peaks is the standard. It is not very accurate. I would say that this exact consolidation only occurs about like 40% of the time, roughly. And generally you will see more peaks and tighter consolidation. Remember that, this theory was developed in like the 30s, and so with algorithmic trading and high frequency trading and market makers now, things are a little bit different in the way they consolidate. If institutional interest is truly high enough, though, it will play out as expected. I moved my 401k to the most conservative bond treasuries options we had and gained 2% rather than losing 13%. Sounds like now might be a good time to catch the bottom and move back in. Could be. Current price is pretty cheap and relatively in line with the lower end of retail cost bases. So it's not, like 165 is a bad price for GameStop, but it might not be the best price to enter options. If the cycle does repeat as it has in the past and we drop, say we drop down to the 120s, those 165 options are suddenly be very, very far out of the money. And so I would like to at least confirm this last leg before I think about entering anything. see a recovery here. We did drop lower on the second part of this, so even though our volume traded really didn't trade lower, you know, it traded about the same place. You know, we had some volatility spikes to the downside, but our volume was not in line with that price drop. What about the asymmetric risk I was talking about? Is there something specific about the asymmetric risk? Are you referring to the VIX, GameStop? Do you think money comes back into CLVR tomorrow, or that T+2 helps CLVR some this week? I don't know. That's why I bought Leaps. I'm still testing the indicator, right? We've got 2 good tests, but that's by no means a reliable indicator at this point. So that's why that's one of the reasons I bought so far out. I'm giving it plenty of time. I don't know the market maker positions or the FTD positions over there. I know the borrow rate's very high. It could be a while until price improvement is seen. Think APL has any more room to run in the short term after this recent week plus string of green days? Apple. I mean, Apple's recovering back to, you know, this 173 resistance. I fortunately got out fairly near the peak on the calls I bought down here, and the ones I bought here. Which was a solid run. If it does, remember there's, you know, if it does continue to fall, there's support at this 166 trend, which is fairly strong. It could bounce here at 163. You know, it tested, it rallied back up. I don't know if it will break its all-time high, but it could. This will be also reliant, you know, on the market staying stable or improving. I would say it's right now it's more likely that it comes back down into this, you know, either like 170 or 166 range, then it moves back up. This currently looks like it got rejected at this trend line here, so maybe a little bit more consolidation after such a huge run. I meant, is it still growing or reducing? It's reduced. The price went up, right? Covering occurred, so asymmetric risk is reduced. If they short us back down again, then it's increased. The lower lows coupled with higher high on the second, third test imply that consolidation is destabilizing with each oscillation. This could be mad bullish. Yeah, it could be. I agree. The volatility at the peaks is compelling as well. Would you please take a look at LAC lithium? I'm looking for the test of the all-time high and possible breakout past it without overhead resistance. Okay. I will tell you, Log Danson, that I do not like all-time highs. Doesn't trade a lot of volume. Let me look at the one day. Sure, it's more likely to be rejected. Just statistically, it's more likely to be rejected at around $49 or right where it's at 38 than it is to continue to push up. It can, but it's less likely that it will continue to push up, which is all you can really determine, right? Because it's an all-time high. There's no way to tell how high something will go after breaking its all-time high reliably. You know, people can use fibs and stuff, but those are by no means a guarantee. You could like retrace it if you want. Does this one work? Oh, okay. Backwards. Okay, that's there. Yeah, probably likely to retrace back to the downside before moving up. I mean, it's just gonna tell you the same thing I just did, right? It's Gunnar Roy, thank you so much for coming to Dillionaire, man. Hit me or the moderators up on the Discord, and we'll get you the information needed to add yourself to the country club. Thank you so much, man.
Happy birthday, Gert. Yeah.
You explain why volatility at the peak is compelling, because it means that buy pressure was very high into high short pressure, generating lots of volatility at that low price point. Also at the high price point, short pressure was high. It means there was quite the struggle, right? The more volatility at the peaks, the more interest in the stock. Yeah, it would definitely be chasing now. What would you see as an ideal announcement from GameStop in regard to the ratio and stock dividend in general? Oh, I don't think it matters. This early, I would say 2 or 3 to 1 would be best. Something small, a smaller split, not huge, right? Like GameStop doesn't have the valuation yet to really have a huge split. Like they don't want that much liquidity. So a small split. You know, the announcement and the change of the corporate charter is really more about the future of the company and their intention to split more over time. Any expectations from CLVR this week? I mean, I have like May and January calls on it, so I don't know. I don't care if it runs. Cool. I don't know when it will run yet because right, we haven't researched the short positions there. We don't know about what ETFs it's in. None of that. I really don't have that much interest in it, frankly, to spend the time or dedicate the time into doing that. We will. I mean, I'm simply waiting for the scanner to play out and asymmetric risk satisfied. Right. That's what's generated by shorting those delta sensitivity spikes. Borrow rate's already high, so it's compelling for it to move to the upside. I think it's in a very good position. I really hope you will rage quit next week. A similar take on the SPY? Yeah. I mean, Apple SPY, same thing, right? Would you still consider the split early if they would release the NFT marketplace in the coming weeks? No. The split's not going to happen until after the meeting. And who knows when. They can announce it for next year if they want to. Yeah, RC makes an announcement every T+9. It's interesting. How upset would you be if the 741 crowd ends up being right and the split is announced at 7 to 1? I mean, they've been wrong about every other one of their predictions. So, sure. Who cares? It's not going to be announced Tuesday morning. Probably. It'll probably be like a couple weeks before we see an announcement. May not be. Maybe a week or two. They'll give it a little time for the dust to settle. If he's smart, he'll wait 2 + 3 days and then do it, which will be Wednesday. But the vote doesn't have an effect on the well, it's not like a catalyst or anything. Yeah, I don't play mining companies. I don't play mining companies. I don't play mineral exploration. I don't like playing oil exploration either. Generally, it's a little more reliable and less shady, but anything to do with mining is just, they're always mostly garbage stocks. Do you think the shorts use the stock split news as a cover to cover their obligations? Nothing got covered. We ran $30 in after hours. It was just market makers hedging their delta against risk. Could it have been something else? Sure, but why not the most likely answer? Is now a good time for an entry? Yeah. It's fell right to its support. It can bounce here. The consolidation here remains bullish. So two, especially, I mean, near the money, far dated calls at this point, like 220s. If it doesn't just run in pre-market, which it frequently does, then 220s are pretty compelling. If it dips in pre-market, then you can just wait for the lower test, which wouldn't be super bullish. I might consider buying puts at that point. Should have played Maxer. Didn't we? A little bit? I don't remember. You like all-time high plays? You know that they're always statistically more likely to turn around, right? A rejection at all-time highs is always more likely. It's like 42%, I believe. Pat cross to a higher high. Maxer seem like cat? No, right? Lots of things become channel locked for different reasons, but not generally with such a broad range. Cat's extremely profitable, right? On this move, it moved from, like this is almost a GameStop sized move. It moved from the, lows at 179 all the way up to a test at, 227. And when you're playing options, this is what you want. You want big notional value increases, right? Because this drives profits. Stocks go from, 35 to 38 all the time, but you're not going to make as much money off of that move. Post MOASS, will you call yourself Xerxes? No. It wasn't meant for you, it was meant for... Oh, okay. What about 1,000? I have made about 300 to 500 per day on the SPY, excluding a day or two of chop. Without about $1,000, I've made 300 to 500 a day on the SPY. Nice. Those are very good returns. Many thanks to you and your teachings of options. Problem, man. All right. Any other questions? I'm gonna wrap this up. I think chat's kind of slowed down. I think everyone's kind of in a good place. I'll get the pickles picks out later tonight. Mostly updates to current positions. A couple new things that I want to talk about, and then that'll probably be it for today. Yeah, and then I'll see you guys tomorrow morning at 9 a.m. That's on AMD. Seems like a good entry. I was gonna grab some leaps to ride up on a bounce before earnings. Probably not a bad strategy. I just closed out some contracts, but I'm still holding this fucking 145s that I bought, which is irritating. And they're free, so I don't really care about them too much, and they were leaps. I didn't really pay for them. I just bought them with profits. I don't love the current level. I think it can go lower. I think you could get another entry around 100, maybe. It's definitely risky. I think, well, it kind of already tested here, but not with a lot of volume. Let me see what it looks like on the 1 hour. 1 second. So it did find a little bit of a floor. Still just in this channel. 4 hour, still kind of in that channel. It could find some support here. I think if it stagnates in this range for a little while, then it would be a good entry, but I'd be patient with it. And the price targets here, you know, would be 115 and 110. 110 if you want your options to go in the money. Sorry if I missed you answering. What do you normally set your scanners to look for? Ooh, lots of different stuff. Generally, volume and market cap are the first two things that I'm pretty strict about. If something's not trading decent volume and has a shitty market cap, you know, it's probably not a great stock to play options on. After that, you know, I'll start to look for like maybe look into like oscillators, bottomed out RSI, or RSI moving up from a bottom on a long-term time frame, like daily. Generally a bounce back above 30 on the RSI 14 on the daily. Or stagnation and a divergence on like of RSI 6 from 14 from a bottom. Bullish divergence on the RSI 6. Those are like the three first basic things. More after that, then you start to look into like sector performance and things like that. Generally, I prefer to do deeper analysis even on my day trades, and so the scanner really only, I usually only use scanners to highlight opportunity, and then I dig in and find out if there's actually opportunity there or not. And more of that lately. I used to, you know, just scan when I day traded. I just scanned for volume because, like, you can always scalp, right? You just don't give a shit. Do you think there's a risk that a cash equivalent might be given instead of additional shares of the Jimmy stock split? No. Down into the 80s, new Oracle offer. That'd be interesting. It'd be very profitable. The options are still extremely cheap. But it could also just be shorts or pushing news about the lawsuit, and it's really not that bad. You think you could teach us some DMI ADX secrets? Oh, silly Stefan. I don't even, that's just one of like 10 different oscillators that I'll look at when researching a stock, right? Just learn to use everything, Stefan, and then learn to use it better. Your love of oscillators and putting a bunch of shit on your screen irritates me. WP 10 of 10 and I'm billion market cap. Didn't you message me about this? I mean, from a technical standpoint, it doesn't look great, although it is approaching new lows. Settling on these lows, let's see. Kind of just chopping and not great chopping. It looks like it had a bit of a move, like an accumulation move after this big dip. But then, the interest mostly sold back out. So I would probably look for this to drop even lower, honestly. I could see another test at like 73. Maybe even 72 before moving to the upside. Many options for $10 at late April, June, October. I'm probably going to be adding to my wheat position. Space Monkey, averaging down, reducing my theta cost a little bit. Yeah, I'm still in it though. I haven't exited my positions except I've brought them closer to the money. Are there any way shorts can get out of their short position without covering with the incoming split dividend that is in the foreseeable future? Short position without covering? No. So if we don't run, like, there's always the possibility that we're just not right fundamentally. I don't think that's true. I think we will run and we will see covering. And we will possibly see a squeeze. I think the possibility for that squeeze is high already and now higher. So I wouldn't, but no, they can't. That's not, it puts them in a shitty position. Fuck you. See you tomorrow. See you later, man. All right, guys. Thank you all so much for tuning in. I appreciate it. Hit me up if I missed your question or something on the Discord, and I'll try to get back to you while I'm doing the Pickles picks for the rest of today. Otherwise, I'll see you all bright and early tomorrow morning at 9 a.m. Thank you guys, and have a lovely night.